Welcome back, everybody, on your Friday morning. It is half past the hour, and we are following the latest in the conflict in the Middle East. Iran is hitting the entire world where it hurts, the oil. This new video shows the flames and the smoke pouring out of a major oil refinery hit by an Iranian drone. The attacks on some of the world's biggest oil fields, sending prices skyrocketing and stocks tumbling. It could take weeks for American forces to be able to reopen the crucial Strait of Hormuz. About 20% of the world's oil flows through there. NewsNation national correspondent Alicia Nieves is on Wall Street for us this morning. And Alicia, some investors are growing increasingly worried that we could be on the brink of a recession here.
Yeah, good morning, Markie. That seems to be the case here. We are seeing markets kind of send some concerning signals that we haven't seen in almost two decades since the 2008 Great Recession. Over the last few weeks, we've been witnessing Treasury bonds continue to sell off. This is a sign that investors are bracing for an economic slowdown and think that federal interest rates need to go up. They need to be incentivized, given the added risk. That is creating what is called a bear flattening pattern in the bond market, another sign that bond traders think tough times are ahead. And of course, the price of oil, that is continuously now and steadily over $100 a barrel. The last time we've seen all of these signs happen at the same time was, again, the 2008 recession, the year the economy pulled back, and some, say it crashed. Right now, what we're seeing and what I've been hearing here on Wall Street and really beyond is investors bracing for everything from, another recession to a market correction, which would be, markets pulling back 10 to 20%. We've already seen some major averages pull back around 5%. Best case scenario is just economic slowdown for a few months and oil prices, remaining high for a few months as well, Markie.
So with all these recession red flags, warning of tough times ahead, Alicia, what does this mean for everyday Americans, and how should we be acting and responding in this time?
Yeah, most experts are saying, everyone at home, just prepare for prices to maintain the pressure that we've seen for the last couple of weeks here, that they're going to stay higher. The extent of it, we've seen critical oil infrastructure, be hit in the Middle East. That's again leading to these higher oil prices. And the extent of that damage is something that investors have been really trying to figure out on the fly. How long facilities will be offline? That's been practically impossible as the war rages on. And that's why we've seen so much volatility and so much concern over where the market is at and where it's heading the economy more broadly. The fighting is shifting so quickly. Again, the data's hard to come by. And so investors are just trying to, figure it out. They can't keep up. That is affecting what people are paying at the pump. We've gone up nearly $1 in the last month. President Trump has been trying to do his best to ease fears and downplay what is happening here when it comes to these rising oil prices.
I thought it would be worse, much worse, actually. I thought there was a chance it could be much worse. It's not bad, and it's going to be over with pretty soon.
Yeah, and while the president has been doing his best to try and ease the concerns that Americans have with rising oil prices, every day we are hearing some sort of new initiative from the administration to try and tamp down those prices. Most recently, Treasury Secretary Scott Bessent talking about unsanctioning Iranian oil as another effort to try and start bringing prices back down, Markie.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.